today on the Tearsheet Podcast.
The fact is, people need to take out these private student loans to go to college. And as we looked into what was out there, we started asking ourselves, like, well, does the world need another private student loan lender? But as we looked into the other options, the current options out on the market looked like they were built in Windows 95, and most of the students were not even born who are getting these loans were not even born in 1995.
Welcome to the Tearsheet Podcast. I'm Zack Miller. Student lending is undergoing a significant transformation. Earnest has refinanced over $10 billion for over 124,000 people, helping them pay off their debt and giving them the financial capital to reach their goals. The company combines design and data to build an innovative model for consumer lending, available through a simple, easy-to-use mobile app. David Green, Chief Product Officer at Earnest, joins us on the podcast to talk about lending in our economic environment, as well as the firm's relatively new product, Inschool student loans. Lastly, we talk about the lender's product pipeline. David Green is my guest today on the Tearsheet Podcast. What could you do with better real-time consumer data? All data aggregation from Fiserv enables access to consumer permission data from over 18,000 sources. Lenders, advisors, fintech firms, and financial institutions can turn this data into actionable insight for their customers. Go to fiserv.com/alldata to learn more.
Hi, I'm David Green. I'm the Chief Product Officer at Earnest, where I oversee product management, design, user research, and data and analytics. Earnest is a fintech lender on a mission to empower people with the financial capital they need to live better lives. And we have two primary offerings, student loan refinancing and private student loans. And the basic idea is that we help people pay for college and then manage their debt after graduation and get out of debt. And since inception, we've refinanced over $10 billion of loans for 125,000 individuals. And last year, we launched our private Inschool offering, and this will be our second season coming up now.
Great. I'd love to get into that. But before we do, can we talk about the challenge as a lender, both to originate and to refinance student debt?
You mean the combination of doing both of those things?
I really just like talk about the challenges of your core business and servicing your customers.
Yeah, I mean, I think certainly in the refinance world, some of the challenges you have are you are capped by the idea is that you are taking loans that were originated at one interest rate. A lot by the federal, the majority of student loans are originated by the federal government, about 90% at a certain interest rate that gets set every year. And you are trying to find individuals that have shown improvement in their financial health over time, and you can then offer them a better interest rate. And so one of the challenges is that you are always kind of beholden to the interest rate that the federal government has set. So I think that's a challenge. I think another big challenge for us is this kind of applies to all financial products, but lending certainly fits right in that category. But the idea that there are so many different laws and regulations you have to comply with, and so many disclosures and rules around how you display information to the customers, and those frequently make it difficult to do what you think would be the most natural way to approach user experience or display information to users. So I think figuring out that challenge is another big thing that we're definitely focused on at Earnest.
That makes a lot of sense for the head of product. Is there also a communication or educational component that you find potential clients, prospects I kind of need to hear from you guys? Do they understand the situations they're in, or do they understand the potential to refinance and understand how that process works?
Yeah, I think this is a good question and a tough one for all of us, and something we kind of go back and forth on a lot. I think you hear a lot about financial literacy and people need to understand these situations more. But I also think back to, when I went to business school and I was looking for loans, and I'm going to, a pretty good business school, and I'm expected to know all of these things. And the truth is I was, pretty lost looking for loans as well. And if me in my shoes, I didn't really have a great way to figure all of that out. Expecting 18-year-old students to get a grasp and a handle on like loan mechanics and fixed and variable rates and how your deferment affects the rest of your your total cost of your loan. I think all of that is just a little bit unrealistic to think that that's the answer, right? So I think a lot of how we think about it is more while there is a subsection of people who do want to learn more and want to get in the nitty gritty and are building their own spreadsheets to track how all of their finances are doing. A lot of what we think about is more guidance versus just pure information and literacy, because people ultimately need to be kind of handheld and told, what the best thing to do is versus just giving them all the information, if that makes sense.
Yeah, it does. Can you give an example at the product level of that type of guidance?
Yeah, so I think, for our private student loan that we launched last year, one of the things we heard when we did our user research was that people didn't really understand, they would start paying back their loan or they would sign their loan and they didn't really even know what they were signing up for. And there's a bunch of different options when you're signing a loan. You can choose between a fixed or a variable rate. You can choose to make a payment while you're in school, like a fixed payment or interest only, or your full principal, or you can pay nothing, which is what a lot of people do while they're in school. And then you can choose the term of the loan. And so there are all these variables, and nobody really understood how to choose between them. And so we built kind of a simulator in our checkout flow, which shows as you switch around each of these variables, what the total cost of your loan over the lifetime is, and then combine that with what we call your payoff journey, which tells you, you're going to be paying $25 a month while you're in school, and then 9 months after you graduate, you're going to move up to your normal payment, which is X, and you're going to be paying that for this many months. So I think that's how we try. That's a big way that we've tried to do that on our private student loan side.
And now a word from our sponsor. At Tearsheet's Day-to-Day conference, Fiserv's Paul Diegelman drilled down into the future of personal financial management. Paul, you're talking about PFM 2.0.
It's actually two separate and distinct applications. Liquidity is a huge problem right now. People just don't have time to do things twice. Basically, most parts of the country shut down for COVID. Our PFM user growth was over 20% in the first 2 weeks alone. Underrated, 100%. How could we use AI to impact PFM? I'm up for anything that helps people. And to help people, you need an economic model.
To access the full video from Paul's talk, go to tearsheet.co/speedoflife. Got it. And you mentioned this new product, the Inschool loan. Can we talk about that, sort of the impetus for creating that and sort of how it's being used?
Yeah, I think, so we started our refi product in 2015, and we had always thought about doing the Inschool loan as well. And it's a little bit, for us, the refi product is all about helping people kind of manage the debt that they have and get out of it as fast as possible, or manage their monthly payment. And it seemed a little bit strange to then be adding to that debt. But the fact is, people need to take out these private student loans to go to college. And as we looked into what was out there, we started asking ourselves, like, well, does the world need another private student loan lender? But as we looked into the other options, the current options out on the market looked like they were built in Windows 95, and most of the students were not even born who are getting these loans were not even born in 1995. And the CFPB, I read a study just recently. The CFPB receives 12 complaints every single day related to private student loans. So that's like they're getting thousands and thousands of complaints, and so all of that would go to say that yes, like something is broken there and needs to be fixed. So we thought there was a good opportunity to apply, what we've learned on the refi side to making a significantly improved private student loan.
So what are the parameters of that loan, and I guess how are people using those? What does the journey look like, I guess, from a consumer's
so
point of view?
Basically, how many consumers would approach this is you decide you're going to school and you fill out your FAFSA, which is the financial aid form that goes to the government, and based on that, they would decide how much money you can take out in loans, and also financial aid awards and anything like that. So most people, for undergrads, there is a limit to the amount of money you can borrow from the federal government, and it's across a few different programs. And so for anybody who has tuition above that amount for a year, they need to supplement that with private student loans. So as I said, the vast majority of people will kind of fill up their tank with federal loans and then look to supplement with private student loans. And then they would come to us or one of the other private student loan lenders. Most of the private student loans are co-signed. About 90% of them are co-signed. So, that's an additional step that people have to go through on the private side that is not required on the federal side.
At the product level, sorry, I'm curious also to know what the co-sign process looks like.
Yeah, so we tried to do a bunch of work around the cosigner process as well. I think that's it's just a really tricky process. This is the first time in students' lives, or maybe the only time in their lives, where they're going to have financial discussions with their parents, potentially about how much money they make and how much they can afford, and did they save for their students' college, et cetera. And after we did a lot of research here, we found that these conversations were extremely stressful, and people didn't really like having it, or people didn't even know who to go to find a cosigner. So we've tried to, with the combination of our in-product flow about letting students invite cosigners directly from in the product with reminders, showing each other the other person's progress while they're going through, and trying to just facilitate those conversations to be less onerous and less uncomfortable, and then providing additional, this is kind of where our content comes in, helping people understand what makes a good cosigner, who they can ask if they can't ask their parents, that sort of thing.
Got it. I'd like to switch gears and talk about, David, I guess how COVID has impacted both Earnest and your relationship with your clients.
Yeah, so I think that when people ask this question, I think about it in kind of how it's related to both products, because they're kind of different. So the vast majority of our current borrowers are on the refi side, and immediately I think we saw a large jump in the number of people going into forbearance. So they would take, this is basically a 3-month non-payment. During that time, interest still does accrue. There are a lot of reasons for that. That make it difficult for us, beyond just the monetary piece, that make it difficult for us to not do that. We saw for sure the largest percentage of people who have ever taken forbearance with us, many times what is normal. And then we just came up on that 3-month period this past month, basically, where people are coming out of those now, and we've actually seen a lot of people. We think we're being prudent, we're being smart. Didn't really know. We kind of were uncertain what was going to happen at the beginning, because we've seen over half of those people, maybe close to 75% of those people, just return to making payments. There's definitely a non-insignificant percentage of people who are still having difficulty, and who we are working with on either further forbearance or different payment programs. I think for us, we want to be there for our clients and understand that this is not for this is not something this is not a willingness to pay problem. This is just a cannot pay ability to pay, and hopefully a shorter term kind of shock. But so I think we've tried to send a ton of updates, be very communicative. We put, I think another piece of this is when this all happened, the federal government did a 6-month forbearance with no interest. And one of the first things we did was highlight on our refi application that, hey, like now is probably not the time to refinance your loan. If you're refinancing federal loans, like you should really, consider just taking advantage of this, payment holiday. And because ultimately we want all of our clients to be making the best decisions for themselves. So I think not only have we tried to help the people who are our current borrowers, but also prospective borrowers.
Got it. And how has the current environment impacted the product pipeline, and I guess how you look at your product portfolio?
Yeah, I don't think it's had a huge impact on our product pipeline. Obviously, you start to look at some different things as you re-examine your credit policies and your risk policies and things like that. But as we look to the future, on the Inschool side, I don't think we've seen to date. We have not seen a huge impact. I think probably what is usually a 2-month peak season from middle of July to middle of September, which is when the majority of people apply for those private student loans, will be more spread out as schools kind of go back and forth on when tuition is due and is it going to be discounted and things like that. I think for us, some of the interesting things that we are paying attention to for sure is, I think should schools not go back, which obviously many of them have already decided they're going to be online only. What does that do to, there's going to be, we've already seen calls for reduced tuition and, things like that. And so what does that do to just the market for colleges? Do we think that changes at all? Does this, create kind of a new forcing mechanism for schools to cut costs or to think of new innovative ways to serve their students? And I think that's one of the things we look at as well, as we're all kind of trying to, ultimately the school sets the tuition, which then makes students get student loan debt, and then we provide the loans and try to help them get out of debt. But if we want to ultimately help people get out of debt faster, it'd be great to have them not take out as much money in loans. And so I think we are also examining ways where we might be able to partner with schools to help provide education or other services that could be beneficial to students. And I think those are some of the things we have not previously thought about that have kind of surfaced and since COVID.
Yeah, definitely a new world out there. Lastly, what are your biggest priorities over the next few months from a product perspective?
Yeah, I think so. Our number 1 and 2 priorities are, our current products, and obviously this year has not turned out like we thought it would, but we still feel very good about where we are and where the products are going. For our, we've talked a bunch about the Inschool loan, but this is only our 2nd year, and that product is very different than refi, and in that it's extremely seasonal. So it's more similar to a tax product than it is to other lending products.
Interesting.
Because all of the, it's like you're prepping for tax season, and you get to build all year getting ready for that, and then you get to run your play, and if it works, it works. If it doesn't, you try to fix what broke in the off season. And we're coming up on season 2, or just right in the swing of season 2 here, and we feel really good about it. But we're excited to see all the improvements we've made over the last year, see how that plays out, and learn from that, and figure out what we want to do moving into next year. But I think the other piece is we have very much chosen to focus on financial education and student loans as the problem we want to be working on as a company. And helping people, finance their education and get out of debt. And so we are, in terms of, what's next for us and things we're looking at, I think it's figuring out what are all the various ways we can contribute to helping solve that problem, which is, pretty different, I think, than a lot of the other, either fintech lenders or fintechs more broadly serving a more well-off millennial client.
Got it. David, thank you for joining us on the Tearsheet Podcast today.
Yeah, thanks for having me. It's great.